Barclays launching a bold 3-year plan for shedding costs as well as boosting and diversifying revenue, aiming to return at least $12 billion to shareholders by 2026 through dividends and buybacks. The bank also announcing a wide-ranging overhaul of its business into 5 operating divisions from 3 previously. I'm pleased to say that joining us around the table is the CEO of Barclays C.S. Venkatakrishnan. Venkat, great to see you, sir.
Very good to see you.
Particularly here in New York City. The stock is doing really nicely, so let's start with some good news.
Yep.
We've rallied since the middle of February pretty aggressively, I would say, up by something like 20% last time I looked yesterday evening. Do you think that's evidence that shareholders are buying into your vision?
It's the early stage of that evidence. What's most important for us is this plan. And it's a plan to increase our ROTE to 12% from the 10-ish it is now. It's a plan to return about £10 billion to shareholders and capital distributions. And it's a plan to have a broad, diversified bank that's a global banking leader centered in the UK, with an investment bank that is going to 50% of the bank from around the 60% it's now. So our job is to, having created the plan, is to execute it, and the share price hopefully will follow.
Can we get into the investment bank? And you talk about diversifying revenue and leaning maybe more into advisory fees. Is the talent there on board in the investment bank already to make that shift, or do you need to hire to make that happen?
It is substantially there. You know, we made some organizational changes last year. We have new leadership in the investment bank. We hired a bunch of very skilled bankers in healthcare, in technology, in the energy transition. And that has already started to have its effect. Last week we announced EQT's sale. We advised EQT on its sale to Equitrans on its sale to EQT. And so we're beginning to feel the momentum from those hires.
What do you think it is about investment banking in and of itself that makes it a less attractive proposition to remain at the same size versus, say, advisory fees?
Well, one of the things is when you move into advisory fees, you start getting a better return on your capital because you're not outlaying as much capital per unit of revenue as you do if you're purely lending. Now, lending is an important part of what we do. We are a very big player in the fixed income markets, in the debt capital markets, as well as fixed income trading. So lending is a part of what we do, but we're just trying to broaden it into more advisory and more equity-related revenues.
How much is this sort of a new model of banking that's basically taking all of Wall Street and a lot of the global banks too, which is trying to cater to the whole client rather than, say, go after specific deals and be focused on, for example, being at the top of a league table?
Yeah. I think it's an important part of the shift that's happening. And it's happening because previously in the investment banking side, we were working with corporations. And since then, we still work with corporations in a very big way. But in addition to that, you've got the financial sponsors and the sovereign wealth funds. So the growth of concentrated pools of capital makes it important to have that full relationship with those players in the market.
Venkat, every time we sit across the Barclays boss, I think we ask the same question. I can think about when Bob Diamond left that morning, then Anthony Jenkins came in. I remember I was actually at Barclays HQ the morning Jenkins got fired. I was sitting down with the chairman and we talked about the same thing. The investment bank, the future of the investment bank. Do you find that's more of a media obsession than it is an obsession with investors? Where does that question come from?
It's a legitimate question. And in our Investor Day 4 weeks ago, I tried to address it directly as well. I think, first of all, it's important for Barclays to have an investment bank. We are good at it. We are the largest investment bank outside the top 5 in the US. I think it's important for the world to have a counterparty that's not just a US bank, and they would prefer a UK bank when they do it. It's an important source of revenue for us, and as I said, we are good at it.
Why is it important, and why do they prefer a UK bank? Why is it important to have a bank outside of the US? What are the benefits of that?
Well, you're diversifying your counterparty exposure in a national way as the world is becoming a little more deglobalized. You know, London has been historically a great financial center and remains one so, and it's a very important one. And then UK law governs a lot of financial contracts. So all those 3 things make it very attractive to work with a UK bank.
Does it also make it incredibly difficult to compete outside of the UK or, say, in the US when you've got a JP Morgan that's dominating absolutely everything?
Well, look, there are very large banks that are in the US. The world is big enough for all of us. We act like a US bank when we are in the US.
Well, when you act like a U.S. bank with a very specific focus, you've talked about in the pillars, the 5 pillars in reorganization, the importance on focusing on consumer lending, consumer spending. Recently, you offset some risk from your credit card portfolio. There is a real question here about where you see an opportunity to lend in the consumer space at a time of uncertainty in the cycle.
Yeah. So we view the consumer space in 2 ways. In the US, we've got a great credit card business, but it's very specialized on partnership cards. We've got 20 corporate partners, very blue chip corporations, 20 million underlying customers. We're looking to continue to grow that partnership card business in the US in a measured way because it has great synergies with our investment bank and it's a great overall business for us. In the UK, we have strength across the consumer franchise and in small business banking and corporates. And there, it's sort of, it's our homeland. It is our home turf, and we are very strong, and we look to increase that strength.
Well, I guess here's a question. Is there basically more emphasis on growing in the United Kingdom outside of the U.S.? And the U.S. effort's going to be much more bespoke, focused on very clear sort of verticals rather than the whole picture in the same kind of way as the UK or elsewhere?
Yeah, so the way I think about it is that we've got a complete banking presence in the UK, touching customers from the very largest corporations down to individuals and offering them the full range of financial services. In the US, we offer investment banking services very well, trading and for banking, and as I said, a very good specialized partnership credit card business.
We had a rate shock, big time, on both sides of the Atlantic in the last 12, 18 months. What we haven't seen is the credit stress off the back of that. Yeah. As you look across the business at the moment, corporates, consumers, the US, the UK, are you seeing any of that emerge at all?
You're seeing small signs of it in the consumer side, with just a tick-up of delinquencies off the COVID lows. And I think, look, employment remains extremely strong, or unemployment is low. You're seeing the effects of inflation, and you're seeing the effects of the wearing off of the consumer stimulus that you had during COVID. And so you're seeing a small increase in delinquencies in the consumer businesses.
Is there a pocket of risk that you're being super vigilant about at the moment, that maybe you're pulling back on lending around that particular area of the economy?
Not really. I mean, I think as an overall matter, taking the very big picture, the economy is stabilizing. It looks like on both sides of the Atlantic you're having a softish landing. Employment, as I said, remains strong, and overall credit statistics and the corporates remain strong. So generally, we are constructive towards lending.
I wanted to finish on the City of London, if I can, if you'll indulge me. Barclays and its roots of Barclays go all the way back to the late 1600s, early 1700s. We're talking about centuries. Yeah. The City of London for a long, long time has been at the epicenter of global finance. Do you see that as under threat in any way, shape or form? Do you think the UK has taken that for granted over the last several years?
I don't think the UK has taken it for granted. I think it's very important for the UK. I think the UK understands that. I think politicians on both sides in the UK understand that extremely well. So no, I think there's a lot of support for the City of London.
This raises a question of where we are in the economic cycle, where it is strongest. And this week we do get a Bank of England decision. Is it beneficial if rates stay higher for longer, or do you want them to come down to support the economic growth and maybe some of the engine that John was talking about?
So ultimately, that's a decision they have to make. It's very important to balance.
Sure. But,
yeah.
you know.
I actually think a little prudence and waiting a little is not a bad thing.
You think there is an option there to wait a little longer then? Why do you think so? Why is the bigger risk maybe to cut too soon and not to hold too long?
Well, I think that the economy is stabilizing. Employment is still robust. Inflation is coming down. So I think on the balance, it might be more prudent to wait a little longer. Now, our house view and that of many others is for more rate cuts over this year.
Would the same apply to the US? The same characterization of the situation?
I think so, yeah.
Well, but just, would that be good for you? Are high rates good for banks, or are they bad for banks? This has been a perennial question.
Stable rates are good for banks.
Venkat, very diplomatic. We appreciate your time, sir. It's fantastic to catch up and
Thank you.
See you here in New York City. Thanks for being with us, sir.
Good to be here. Thank you.
C.S. Venkatakrishnan there of Barclays on the situation from the United States to the UK, the differences, the similarities, and the path forward.